Welcome traders to the live webinar with Admiral Markets. My name is Chris. Looking forward to this strategy webinar looking at trading retracements and continuation patterns within the trend. Before we start though, as you are probably aware, two disclaimers. First of all, the first one explaining that the webinar is shown to a global audience but may not be suitable for everyone. To find out if it is okay for you, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, just in case you are joining our webinar for the first, second, third time, the webinar is hosted by Admiral Markets, and you can check out more information by going to the website link admiralmarkets.com, and you'll see a couple of tabs at the top and some interesting information when you scroll down. So basically, when you scroll down, you'll see some way to register for these webinars. You'll see the awards won by Admiral Markets for being best broker, best online education, but you also see some information about how to start an account, which you can also find here with Start Trading. If you want to know more about the platforms here, you can find more information about the MT4, WebTrader, MT5, but also about the special basically platform that Admiral Markets has custom made for their traders, which is called Supreme Edition with 60 extra features. If you're more interested in analytics and education, then you're at the right place too, because look at this fundamental technical wave analysis. It's all here. Webinars, seminars, courses, Forex 101, Zero to Hero, a lot of educational value in those courses. Alrighty. Anyone new in here by any chance, or everyone has joined the webinars at least a few times? If you're new, let me know. You have a chat. You could reach out to me with any question you like. Today, I wanted to take a look at, well, trends, obviously. Within the trends, I had a couple of ideas that I still wanted to explore with you. Basically, fractals and trend channels, AO and fibs, and breakouts in general. So I don't have any preference. Does anyone have a preference by any chance? Let me know if you have any preference. In the meantime, let me show you the chart, and let's take a look at the euro dollar. Now, all right, let's zoom out a bit for our chart and zoom in again like this. So was talking about yesterday, for instance, about how the larger trend is still up, right? Definitely, you can see here. I'll make a new template very quickly. All right, larger trend is still up, and basically this is pulling back. There was divergence between the tops, remember, and basically expected at ABC. So when price made here a break, that was the end of the rising wedge, the end of a wave 5 pattern, basically saw a larger correction. To me, the trend is still up, but at this point right here, I was expecting a larger correction to the downside, and that is indeed happening. So we want to be realistic trend traders. We don't want to be kind of trading with the trend with our head in the clouds in a way. That often happens with beginners. They, by coincidence, by chance, manage to catch a trend. They just keep trading that trend, but they're not sure actually why they're winning. They don't realize that they're just lucky to catch a trend. That's beginner's luck. Then when the trend is gone, they keep doing the same, but then they run into a big bad streak because the trend is gone. But they aren't experienced yet enough to recognize the change in pattern and dynamics, market structure, and they missed that opportunity. They kind of missed that moment, and they lose all the profits they made with trends. So that's why I always say we want to be realistic trend traders. Trading with the trend is always easier, in my view, because reversals don't occur that often. So, but it doesn't mean that the trends will always continue automatically. Here was a great example of where indeed a bigger correction occurred. And this is something we were talking about live in this webinar, how we could have avoided, how most likely there's going to be a retracement. That's based on divergence pattern, wave pattern, chart patterns, momentum patterns. So definitely, as you can see, 4 important patterns. Those help greatly with assessing when a reversal or retracement could occur. The other thing, besides patterns, is support and resistance. Price was very close to 120. I would have liked to see it a bit closer to 120, but that's a strong psychological round level. And I knew that the closer we get to 120, the bigger chance that there will be a larger correction. And this upside momentum is going to take a pause. All right, so those were the arguments at that time. And indeed, I was saying that this is a 5-wave pattern. This should be an A, this should be a B, and we should get down to a C. So no one has mentioned a favorite yet. So why don't we focus on AO and Fibs? So when looking at the AO, we can see divergence, as I said, between these tops, right? And we see that price has fallen pretty neatly below the 0 line and a very small hump above the 0 line. So this is confirming a turn, a convergence basically, and you can see that 3 red AO bars is the moment where this particular retracement is over. It's a bit late, that moment, but it's still a good indication. It's a good confirmation that moment is right here. So at this candle, when this candle closes on the 4-hour chart, we know that this correction is technically over, according to the creator of the AO, which is Bill Williams. So we could put a fib. I was talking about putting a fib on the first retracement leg because this is a wave A, this is a wave B, and this is a wave C. And we can see that price stopped at the 61.8 fib. And all of this we discussed pre-fact, right? We were talking about it Wednesday last week, I think. But in any case, if you were following my wave analysis, I was definitely talking about it there. And you can do that by going to Analytics, click on Wave Analysis, and you will see each day a new update. So 61.8 fib bounce, and price is moving lower. So basically, it is a retracement trade at this moment, and we're seeing price fall. So I wouldn't consider this a with the trend setup, but it is, from this point of view, you could consider that to be at least partly with the trend, considering the fact that this is a lower high, right? And this is a lower high. So from that perspective, we do have a trend channel. And therefore, I would still kind of consider it to be a setup that trend traders would go for, all right? Not necessarily maybe up, down here, because that's still a reversal, I would say. But definitely here, I would say it's already with the trend. Small difference perhaps, but okay. So today, I took a trade up in here, all right, because I saw that the price was going with us. We saw a break of this correction, so we have momentum, correction, break. This could be a pullback for more downside. So what I did was I took this fib, I put a fib, I'll show you 1 second. I put a fib from here to here, like this, and was looking for basically the 38.2 fib to react as a resistance, or the 50. That's why I put the fib, the stop loss right above 117.75, which is a quarter level. It's a bit close to the 61.8 fib. I think I actually used maybe a different fib. Perhaps I even used this fib. I'm not sure anymore now. and probably this one. As you can see, it was at the 50 fib, 61.8. I didn't expect price to go above the 78.6 fib, which is why I put the fib here. Sorry, the stop loss there. Whether you use this fib or whether you use this fib, both cases, I would not expect price to go above 117.75. So that's why I put the stop loss at 117.80, 81, I think. Entry was here, and target is at 116, just a bit above 116.60. I might change that because if you can see this channel and the S2 right here, I'm moving for the minus 61.8 target, but I do have an S2 and minus 272 target above it. So if you split this trade in a way, there was a trade here engulfing twins. There was a trade upon the break right here. There was a trade upon the hook back. And I think there could be a new trade if price breaks below this bottom. It's a good candle. There could be a breakout to the downside. So a couple of trades already there, just looking at this $1 this week. Last week too, there was a trade here for downside. I took that one too. And here, of course, there were upside trades with the trend. So regarding the new potential, we're looking at a move down to 116.25 right here from 116.86 right there. This pace, I think, could be still a breakout trade that is remaining on the euro dollar. All right, there's no guarantee with trading, but I think that that's a decent possibility, and that is a decent potential for continuation down to the support, down to the bottom of the channel, down to the S2 and the minus 61.8 target. Now, if it doesn't break below 116.86 with a good candle close like this, and maybe a bear flag on a lower time frame, then there could be a bear flag right now. The London session is over. I'm not sure how New York afternoon will react, and tomorrow's Asian session. But if it goes sideways like that, the break of the bear flag is also fine. All right. Now, what if my analysis is wrong? What if it doesn't get all the way to 116.25? What if this low is the end of the wave 5 and the end of the wave C, and basically the uptrend will continue? In that case, I would need to see a break above at least this resistance trend line. All right, that's step one. All right, because remember, when we look at the 4-hour chart, as I said, the daily chart, as I said at the beginning, and ZT is reminding me, this is large in the long run, in the larger term, or in the larger picture, the trend is still up. When we look at the daily chart, so yes, ZT, I already mentioned it at the beginning as well, that from a long-term perspective, the trend is up indeed, and this is a sturdy correction, in my view. Let me get rid of this fib. So on the daily chart, right, this is just looking like a bull flag, in fact, a bull flag chart, a bull flag chart pattern. So what could happen is that price could get down to that bottom of the bull flag. You know, what looks like a downtrend channel on the 4-hour chart, in fact, looks like a bull flag on the daily chart. And what could happen is a downtrend continuation down to the S2 and then a bounce, right? At least back to the top of that channel and perhaps even a breakout. So interesting trades to trade are the potential short down to the S2, the potential bounce at the S2, and then the potential breakout above the trend channel. Those are interesting trades. In my view, we could put a fib from here to here as well, and we see something else. We see not only the S2, but also the 38.2 fib, which is definitely a support level where price could bounce to complete this fourth wave, because I think this is the third wave due to the strong momentum. This is a choppy fourth wave. Price is now below the 23.6 fib, and therefore there's space potential down to the 38.2, which could be a very likely bouncing spot for the uptrend to continue. All right, so this channel is corrective. Let me get rid of the mini terminal here. It's very useful for trading, but when analyzing, I'm scared you might not see my charts as well. All right, seems not to go away. That's okay. Um, anyhow, basically, basically, it is a bearish pressure at this moment down to S2, but if it breaks above this trend line, if it breaks above this trend line and the weekly pivot point, there could be bullish breakouts as well. All right, but I think the bearish pressure is more likely, and I'm looking for a bearish continuation to the 38 and a bounce at the 38, and then later on the breakout above the channel. All right, is that clear for everyone? So that's my vision on the euro dollar at the moment. I think 116 could be an ideal continuation spot, but it could even go down to the 50 fib as well, which also could still be a continuation spot for the uptrend. All right, hi Band and hi Brian. Brian is asking about the pound. So let's move over to the pound and take a look at that. All right. So the pound bearish definitely made a bear flag as we expected yesterday. Yesterday price was about, let me check, here, right? And here I said it's not interesting to short. There is some space left for this breakout, right? For this trend, uh, but we should see a bear flag first before continuing. And if I remember correctly, I had a fib from here to here as well, something like that. So I'm not sure if I had this one exactly, but I think so. So when assessing the target, I had, I think, this fib on the chart. Oh, that's a text. Sorry about that. And I was saying 128, 129, 129, and then after that, probably to 128.20 in the S3. So price made a good break, didn't reach the target, the larger target, the minus 61.8. So looking for a bear flag and continuation, right? That's what I said yesterday. So we had the bear flag, we haven't had the continuation as yet. Price hit the 38.2 fib, as you can see. Maybe you can't see it. Let me get rid of this fib. So that was a good bouncing spot. Anyone who took the trade there, I think, is in a good position. If you didn't, there is a little bit of space left, right? But not much. So I think trading the breakout, waiting for the breakout here below in 128.50 is risky because price is so close to the target. So I don't think that makes sense. But let's take a look at the 50-minute chart, see if maybe there could be some pullback. If price were to get up higher, maybe somewhere up in here, for instance, right? Turn like this and show weakness here, it could be maybe still something to think about. Let's go to the hourly again. Let me get rid of this fib. Put a fib from here to here. One, two, three, four, five, 6 candles. It's possible that price might make one more push up, hit the moving average again, hit the S2, and then turn. So something like, for instance, a push, a bounce, a hook back, and a continuation to get a head and shoulders like this, right? And then a break of this trend line. That could be interesting. So the right shoulder could be interesting for a short on the 15-minute chart. The break of the trend line could be interesting. This trend line or the failure here. I think still could be interesting to trade on the pound dollar with 128.25 in mind, and after that it could extend even to 127.50, which is a quarter level. If anyone is in this particular trade, in this particular bounce, I would probably just move the stop loss right above this high, reduce the risk, and or even move it to break even. It's a bit early perhaps, but I think it's okay. It should be okay. Alrighty, dollar yen, I think is pretty straightforward. This momentum should get followed through. This is strong bullish momentum, breaking above resistance. I think that if there is a pullback, it's interesting to trade as a continuation. So my plan is pretty simple. Put a fib from the bottom to the top and wait for a pullback to the 38.50 or 61.8 fib zone right in here. That could be 110. Sorry, it looks like I deleted my dollar yen by accident. Strange. Anyhow, I'll open a new one. There we go. So I was saying, basically, very simple plan, just to put a fib from here to here. What I'm expecting is basically a ABC correction at the very minimum, up to the minus 272, perhaps even the minus 61.8 target. So for me, this is an entry zone, somewhere here with the green circle. Targets are up in here. I can also put a fib from this top to this bottom. And I can see that the 38.2 fib right here, you don't see that too well probably. Let me get rid of this fib. Or let me make it a bit smaller, like this. Okay, so you can see, very interesting, how basically the target equals the 50 fib. So it's stopping at the 38 probably now. So if it makes this retracement and bounces, there's a nice confluence of the minus 272 to 50, and the 61.8 and the minus 61.8. Those are the two main targets for upside. And price could bounce at these targets back down. So that's my trade plan on the dollar yen. It seems to me that 5 waves have been completed. I would expect an ABC zigzag. From this perspective, let's zoom in. From this perspective, I would expect price to make a fall down to the 23.6 fib, correct up, fall again towards these fibs. And there might be a head and shoulders here too, like this. I don't think it's going to create a massive reversal, but it could create this correction that goes down to the fibs. What are the most interesting trades in my view? I think the most interesting trade setup is the bullish bounce at support fibs, not the reversal short here. It could work out, but I think it's a trade for very advanced traders. You got to really be cautious about the upside, time it very well, look for confirmations. It's risky and it's difficult. All right, Flavius is asking about the euro yen. So the bullish continuation did occur that I was talking about yesterday, which I put a fib from here to here. It doesn't look like the structure that I spoke about, which was a wave 1, 2, wave 1, 2. But that can happen, and that's okay. Even if the structure is different, sometimes the trade can still work out, right? Even if you had kind of a different analysis in mind. But both played out to the upside. Minus 272 target got hit, so anyone taking this 50 fib or taking the breakout of this trend line, right, had a chance to enter here and hopefully managed to get some pips out of it. From 60 up to 90. If you're not sure about the minus 272 target, right, and expecting perhaps an acceleration or an extension, hopefully you manage to look at this wick and say that's a big rejection bar and manage to make some conclusions about that, about taking profit or about reducing the risk on the trade, etc. What is it now? Let's take a look at the bigger picture. I might revise my upside a bit because I was already worried about the 5-wave pattern not being an ABC, but this pattern, but being a 5-wave, bearish 5-wave. So from this perspective, it could have completed an ABC rather than a 1, 2, 3. In fact, it cannot be a 1, 2, 3. This is not a wave 3. It's too short. It didn't push up high enough. So from this perspective, it does seem to fit an ABC pattern, right? It also completed a rising wedge chart pattern like this. Do you see that? So this last push up was good, but it just didn't go too far. Didn't go far enough to confirm an uptrend. The break of the rising wedge, although price is at the moving average, still above the weekly pivot point, to me is a serious indication that uptrend traders have to be very careful. 4-hour chart is still an uptrend, or maybe daily chart, I should say, right? And this could still be a correction easily. And if you look at this fib like this, right, 38.2 fib bounce, this could just be a correction of that. But what could happen is that this is an ABC like this, and then the uptrend continues. So for the moment, larger picture is up. 4-hour is shaky, though, for the upside. And for me to trade upside, I would probably need to see a break of this trend line, or a bounce at the 61.8, for instance, 78. Those could still be bouncing spots. It could still be considered perhaps a wave 1. It's difficult. No, it's actually not even possible. Wave 1, 2, 3, 4, and this is a 5. It could still be a 5 wave. I don't want to rule it out necessarily. And it could be a leading diagonal, in fact. A wave 1, 2, 3, 4, 5. Although the wave 5 is a bit too strong. Let me take a look at the 15. A potential wave 1, 2, 3, 4. But this is a very long 5 in that case. It's not very clear, but it could be a ending diagonal as well, a wave 1, 2, 3, 4, 5, an ending diagonal within a 5 wave. So let me take a look at it again. This could be wave 1, 2, 3, 4, and this is an ending diagonal with 1, 2, 3, 4, 5 within 5. A large 5th wave, it's perhaps possible. So basically, a couple of things I want to keep an eye on is how does price respond at the 61.8 and at the 50. Those could still be bullish bounce spots. If price breaks below it though, then of course there could be bearish breakout potential. If it breaks below the bottom, I would flip the fib from here to here and look for a continuation down to 127. So this is a bounce zone, but if it does break, you might see continuation like this, and of course the break above this trend line. So break, bounce, bounce. But if it breaks below these pivot points, it might continue. It's a bit tricky perhaps, but that's my view at the moment. So Aussie, let's take a look at that. I was talking about the fact that this could be still a bullish structure due to the correction that's being made. So we are seeing basically momentum to the upside, breakout to the upside, and this looks like a choppy downside. So the trend looks up from this point of view. 4-hour chart, we do have a trend channel to the downside. And I was looking at a potential 50 fib bounce right here. So for me, what I said yesterday was, as long as price stays above 77.25, I think it still could be in a bullish overall structure. And the break here of this particular, of these bottoms right here could see the move to the 50 fib, but then there could be a bounce back up. So I didn't catch the exact bounce, but what I did was look at the hourly chart, and I saw price make momentum here, right here. So I took the break of this fractal. And the reason why I did that was because if price breaks that fractal, we have a higher high, a second higher high already on the 1-hour chart. I expected a bullish bounce on the higher time frames. So from my perspective, it was confirming my larger, the lower time frames were confirming the turn that I was expecting on the higher time frames. So I took that breakout against the trend. It's not something I do quickly, but it has to do with the larger time frames. Price has hit the pivot point. What I am basically counting on is that it's going to break this channel. I don't know if it will. You have a weekly pivot point and the top of the channel, so it's definitely at a decision zone. I managed to take my trade early. As you can see, it was still in this downtrend channel. I managed to take a reversal in this time frame, right? From a daily perspective, I managed to catch a with the trend bounce, I would say, right? Break, pull back, potential continuation. So, Phoebe, great question. I don't have one particular video article, but I think it's actually a great idea. Actually, I never thought about it. You see, I'm using multiple concepts in a way and piecing it together, and it's basically discretionary technical analysis based on patterns, support and resistance, and trend. Using those 3 pillars to analyze the charts and look for the most interesting trade ideas, if there are any. So I use, once again, trend and momentum, point 1, support and resistance, point 2, patterns, point 3, to analyze. And then I translate that into a trading plan using decision zones, triggers, candles, candle reactions. But it is a great idea to summarize that in the article. I will try to do that soon. And if you're curious where that could be, will probably be in the Traders blog, Analytics Traders blog. I publish one article there every Sunday. So I think that there's always a bit of delay before I write it, and it's checked and then edited, stuff like that. So I think beginning of September it could be there. But patterns, I use a lot of patterns. I use wave patterns, chart patterns, fib patterns, candlestick patterns, breakout patterns, so it's very heavily also reliant on patterns. So will price break this decision zone? I don't know for sure. But if it does, the trade is good to go. If I see a rejection here, right, it depends. What I might do, you know what? I think prudent thing, there's nothing wrong with moving the stop loss already to break even. I'll tell you why. I'm going to do that right now. I'll move it. There we go. The reason why I'm doing that is because this candle is either going to be strong with the close near the high, indicating a good breakout, or it's going to have a massive wick at the top, indicating a weak candle close. And in that case, it's a bounce and a reversal. And in that case, price might bounce here and move down back to the top bottom of this channel, perhaps, right? Because we shouldn't forget, we shouldn't ignore this bearish channel. So I think it's prudent, good to go to break even, because my stop loss is below this candle. So either this candle gets a bit retraced and continues, and there's a breakout, and I'm good to go, or it fails and it reverses, and I don't want to be in that trade, because then if I leave my stop loss here, this downside pressure could take out my stop loss at a full loss, and there's no reason to keep holding on to that risk if the trade has already gone my way for 40 pips. But more important, that's not that important, but more importantly is that there's a candle low and prices, there's a candle above my entry, and more importantly, price is at a key resistance spot where it will break or bounce. So I can now watch from the sidelines in a way, if you know what I mean, because my trade is at a small profit or break even. So let's see if it breaks. If there's a good candle close near the high, it's a pretty good sign that the bulls kept control of that candle and that the next candle will break above it. This is the confirmation candle, and that would be a signal for more trades. How to trade it is another question, which I'll dive into now. But that would be the signal, the trigger. It would also break above this Keltner, which is the Admiral Keltner indicator, which is part of the MT4 Supreme Edition that you can use when trading with. You can try it for free, by the way, as well, even if you're a demo trader, right? It's all kind of extra features, including this pivot point and the Keltner. So it's at a key spot. We have momentum. This is corrective, choppy, a channel. Will it break with the trend and the momentum, the previous momentum, or will it extend the correction down to this bottom and then move up again like this and continue with this choppy up and down? If it does break, that's what I wanted to tell you still. If it does break, we'll have a good 4-hour candle. That means there will be a couple of hours upside like this, right? 4-hour candle. What I would be looking for to trade is the next pattern. So let me get rid of some of this. Let me clean up the chart again. So what I'll be looking for is a break and a new chart pattern on a lower time frame, on the hourly, the 30, 50-minute chart, looking for price to go sideways like this, or a bull flag, or a triangle. Some kind of chart pattern that tells me that the breakout is sustainable, that the breakout is not going to turn into a false break. Those kind of chart patterns indicate to me that the market psychology is supporting a continuation of the breakout. So there are a couple of trades possible. One is trading the pattern itself, like the bottom of a bear flag. The second is trading the break of the bear flag. The third is trading the fib itself. One could put a fib from here to here, for instance. Let's say the breakout goes up to the R1, so we can move the fib up to the R1. So the breakout goes like this. We get a correction to the 38. And the 38 itself, the 38.2 fib, could be an entry too. That's how I would tackle the break of this downtrend channel. The pound yen is pretty choppy at this moment. And quite messy, I think. But we can put trend lines to help us a bit, like this. Break of that could be a good breakout to the upside. That would be a continuation signal if we have a good breakout candle above this trend line with a candle close near the high. Always very important for breakouts. Alternatively, we could also use trend lines like this, of course, and perhaps like this for a breakout to the downside. There has been strong momentum. This could be a pullback and continuation down to retest these bottoms in here, right? And tops. We could put a fib. And there's another reason why we might get a bullish reaction of this minus 61.8 target. But if it doesn't, the minus 100 target is the next one at 140.25. So with the pound yen, because it looks quite uncertain at this point, I would probably let price decide the breakout direction and try to follow suit if possible. Try to follow that breakout direction. Alrighty, let's see. We talked about most of the majors here. Euro pound still pushing higher. Pound odd and euro odd moving down nicely. And the euro odd specifically looks like it's not able to break above resistance. It did, well, it did break above this resistance trend line, but I'm talking about this top right in here. We shouldn't forget horizontal resistance. It might break above a trend line. Doesn't mean that it will necessarily break above horizontal resistance or support for that matter. So it looks like it's a break, but just not able to break above the next resistance level. So something to keep in mind. And it is, with this particular speed of price, it is breaking through this support trend line. You see that? And it's getting back below the previous resistance trend line, which is here. So if today's candle is anything like it is now, it looks like weakness of the euro and strength of the Aussie to me. And let's take a look how far it could fall. I'm not sure how far it will fall. We could put a fib from here to here as a conservative target. And what could happen, because there are 5 waves visible here, so we might see an ABC. So targets could be the 50, the 61, maybe the 78.6 fib, but more likely these 2 fibs. So there could be a small extension to the 38. There should be a bounce at the 38, and then a continuation to the 50 to 61.8. My point of view, probably the most interesting trade is this particular trade right here. What could happen is that price hits the 38, makes a 3-wave up, and it could be a head and shoulders here too. That level is around 149.50. So that could be an interesting zone to look for a short. Stop loss above 150 and the target at 147. 147.25. Well, let's say 147.60 because 147.50 is a quarter level. So that will take some time, but that's what I have in mind for the euro odd. All right, let me refresh this template too quickly. And the pound odd is breaking. It's breaking this particular formation. There we go. So that is looking like basically a downtrend continuation. We have a trend line that's been respected here and now breaking to the downside. So with this particular breakout candle, if it closes like this, I think you could see basically a pullback continuation. So one thing could be good is to put a fib on this daily candle if it closes today near the low. I could put a fib on it. I can zoom into lower time frames. And tomorrow, I can try to look for a retracement. All right, so I have this fib on the chart, and I'll be looking, of course, this low could be lower. I don't know exactly where the low will be today. It might be lower. It might be right here. I'm not sure. Wherever the low is, I will use that low. And I'll be looking for retracement to the 38, 50, 61 for continuation. Considering the strong daily candle, most likely, if it closes like this, I would say even the 38.2 fib is more likely. Now looking for targets, I would probably place a fib from here to here. Let's see, let me think for a second. Maybe even here to here. We see a 38.2 fib bounce. So the main target is 159.40 right here. All right, so this could be interesting pullback because there could be a lot of space. Now that space is huge. So of course the pound odd does move quite a lot. But that is quite a hefty zone. So I'm not sure, that doesn't make sense to aim for the entire zone there, but it could be split in parts, right? The first part could be from 162.50 to 162, 161.80. Then a continuation to 160.20, right? So this could be first trade, this could be a second trade on lower time frames, right? And then below 160, it could go down to 159. So yeah, that's how potential trades could be split. Yeah, that's, I think, looking at most of the major crosses at the moment. Does anyone have anything else in mind? But regarding trends, always keep an eye on, of course, depending on the time frames you use, try to keep an eye on the larger structure, try to understand if the trend you're seeing, the trend channel is a retracement or a trend continuation, and then look for pullbacks and continuations. Pullbacks using fibs, and basically continuations using breaks above trend lines, breaks above chart patterns like bull flags. New Zealand. Let's take a look. Let's see. Definitely in an uptrend at this moment. But there was a strong resistance line on the weekly chart. And for the moment, at least, I'm not saying it will stay like this. It is making kind of a rising wedge pattern. So I would be a bit cautious with going. It is uptrend, but this is one of those that I would not be really looking to trade. I think the upside from the R1 to the R2 is very small. There's not much space there. There could be a small breakout trade here in that zone, but then you're going to bump into the target quickly. So small breakout above the R1, perhaps, but at the moment a rising wedge. So if anything, I think there could be, if it breaks below the pivot point and the support of the rising wedge in this bottom, there could be a bigger ABC correction. And if it does make this small breakout, I think it could have some struggle at the R2. So that's my view on the AUD New Zealand. Euro Swissy, let's take a look. I'm not sure if Angel's in the webinar today, actually. Let me check. No, Angel's not here, so we don't have to take a look at gold too long. But basically, I think it's kind of following the analysis we already talked about, which is the fact that it's completed 5 waves and that there could be an ABC zigzag. This is, by the way, Phoebe, this is elite wave theory, by the way. When I talk about waves like this, wave patterns, I'm not sure if you know, but that's called the elite wave theory. So from that point of view, it looks like an ABC. Let's see if other things, let's take a look at Euro Swissy. The Euro Swissy. All right. A wick at the pivot point. That could be a good bounce. I think we have to keep in mind that it could be a pullback because we did have a breakout. All right. So this could be a pullback. Problem is that there's no confirmation as yet that this pullback is finished. We did have a wick at the 50 and the weekly pivot point. So from my perspective, it could still be a good bouncing spot. But if it breaks below this level, then I would be cautious. I think on the hourly chart, it could have finished an ABC correction like this. So my personal view, the best trade probably is a break for wave 5. If this is a wave 4, it should break above this trend line, and a break above like that would be a wave 5. The target is the minus 272 target at 115.30. Of course, there's a 115 round level there as well. So that's something to be aware of. That makes it a bit difficult to trade. But 115, 115.25. I think that having a good candle close just above it, at least getting close to that trend line is needed before trading this, I think. That's my view. But it could be even tradable here, right here. Oh, 1 second, folks. That's the doorbell. I'll be back in 30 seconds. All right, so yeah, that's basically my view at this moment on the Euro Swiss. Let's see if we get some kind of candle confirmation that could maybe even break above these tops, as you can see right here. All right, so folks, that will wrap it up. We're at the end of the hour. We're looking forward to see you in the next webinars, of course. Tomorrow, Thursday, we take a look at education and Nennet and I together. So looking forward to that. Analytics every day. You can find it here. Articles, Traders Blog, Market Heat Map, Market Sentiment, Education, Zero to Hero, Forex 101. All of it is available for your viewing. All right. Wish you all great trading and talk to you soon. Cheers.